Good afternoon, everybody. This is Harmeet from Sigma Picks. Thank you for tuning in. So we're going to be doing another one of these weekly reviews for SPY, QQQ, and IWM. And I think it's a good time to start looking at the coming week because there are a few things that are happening. There's job data coming out, and of course, there's a big thing is the FOMC meeting on the 3rd. So a lot going on, a lot on the table, and the markets are at a precipice where they could actually break out depending on what the Fed says. So just quickly, just so you guys know that from what I see from the CME tool, okay, so it's the CME tool. You guys can go search it online and look at it yourself, but there is it looks like the market is going to be, and the Fed is saying that they're gonna raise the rates by another 25 basis point, and then we'll see what happens in June. But it's not as much again about what they will be doing this meeting, but the language that will come out from the meeting stating, are they going to be continue to be extremely hawkish about raising rates, or are they going to be slowing down and become a little bit more dovish about not raising rates and looking at pausing and getting all the rest of the data in, and hopefully, turning around and start looking to lowering the rates come September, October, or November. So the long time ways away for that. But again, as we know that 25 basis points are going to be in the book, but the language and how they say will matter. Okay, so let's quickly go and look at the chart. And so the way we have it, at least the count that I have, is the fact that I think the first wave of this larger fifth wave is over. Again, I've kept, even though there is a explanation mark, it just says that fourth wave entered the first wave. I kept it there because it just shows the brevity of the situation that we've been in, first, and second, it's okay once in a while that will happen with larger waves where market has seen such a shock that it will tend to have that much of a drawback. So we'll keep it there. We'll go from there, but I've had kept it here. So if you wanted to go back and look at my videos, nothing's changed. We're gonna keep it there. So right now, what I am looking at, the most important part right now for me is this 418.31 zone. Okay, this is just stating that the fifth wave right here is indeed, or this, sorry, excuse me, this fifth wave that ends this first wave. This fifth wave is indeed shorter than the third wave. So just kind of giving you some evidence that okay, so that kind of meets all the criteria that we have for this first wave to be over, and the fact that we also did not enter in the zone of this fourth wave. Okay, so we did not go below it, so we did not pierce through this 374 level, and we kind of momentum stop was at 380, and we have seen starting it move back up, and also we had a straightforward A B C correction. Okay, and now we're moving forward. The only way we know that this first wave right here is over is when we actually start seeing it go above this 418.31 level. I would like to see it go above this 431.73 level, which was the larger B wave that ended, and B and C wave of the fourth wave that ended. If we start seeing this move higher, and depending on what the Fed says, we can pretty much say that we are in this money wave, okay, and the third wave, and we can expect a large momentum move coming in where market participants are going to increase and become more bullish, and we can say that you were prepared to know where we were going. So for every purpose that the way I have it set up is I am looking at this and thinking that we will at least pierce this 418.31 zone, and we may go test 431 area just because the fact that I do think the Fed, they're gonna eventually have to become dovish. I don't think they can keep raising rates. we will know more as the time comes. We will get there. We'll get the written PDF from them and know exactly. But right now, I am leaning more bullish than I am leaning, rather than just being bearish. That being said, that does not know that I don't know that that will happen. So I have to be conscientious about it and understand that if the markets do not break through and get through this area, the 431 area, this 380 is still open to be broken from the downside. So just to be mindful of the fact that you're looking at this larger picture that's happening, and also know that we are still in this kind of range bound. Also, this is your stereotypical Darvas range bound. We're seeing, we want to see it break out of this Darvas range also at the same time, and that will go with the confluence of being in the third wave will give us, we should see more and larger market participants coming into SPY and larger market area. I want to see more tickers being involved than just a few 10 or 20 tickers that have been carrying the markets lately. Hopefully, the whole market will join in. So that is another clue that you should be looking at. That the market participation towards the bullish side has increased through and with multiple tickers that are not just the big 20 that have your Apples, Nvidias, and Microsofts and so forth that have been carrying the market so far. Okay, so let's look at the QQQs. Excuse me. Let's look at QQQ. QQQs are in a little better shape. I think I have started labeling the third wave a little bit more, and I will just give you the reasoning behind it. I do think there's a significant evidence that Qs are going to be in our money wave, and moving forward. So I am looking at the targets that right now I'm looking at. Of course, is this 339 and 342 zones. I want to see this break through this 334 and tackle this 339 340 zone. Okay, that is utmost important. The reason I have already started labeling this wave, the third wave, the 3 of 3s, which is a super important wave. So 3 of 3. So let's just quickly, I'm going to cross this out. So let's just continue 3 and of the third wave that we are looking at. So this is, we are in the process of breaking out into a major bullish cycle that will last for a while. We still have not, the only thing that we need, the hurdles again that we need to cross is this 334 and 339 zone, and we should expect to see Qs leading the market because they are the ones that are holding all these major tickers that have been supporting the market so far in SPY and so forth. So we should continue to see. So this is a big deal. There are lots of little twos that are ending. Okay, so this is a big deal. We are in an uptrend, straightforward. So Qs, I am extremely bullish about. Don't want to see this 10 line break. Don't want to see it go below that. And I do expect it to get to at least 334 area and then move up to 340 zone. So Qs are in much better shape. They are going to be, again, driving the markets higher. That's just not just my opinion. It's not anecdotal. It's purely just the way they have been. Let's just quickly look at, even if you look at it, we've had our golden cross a while back in the Qs. We had our golden cross and we're comfortably above this 50 and the 200 SMA. So, and it is moving higher and it is out of this consolidation. So expecting it to go higher again. This does come into play. This trend line that I have already drawn, this also comes into play, this 340, 334 area. So everything is kind of leading us towards that, and hopefully we'll see some major momentum move, maybe something of akin to this, how look at this slope. Can we expect something like that from here? Absolutely, some sort of. So you can measure your slopes by yourself. I think that's pretty straightforward math stuff that everybody should be able to do if you have taken calculus or even algebra. So let's be mindful. Qs are more bullish than SPY, and the least bullish of all three ETFs that I follow is IWM. So let's quickly look at that. Uh, IWM is still, I cannot say for any certainty that we're out of the second wave, the corrective wave, okay? We are trading for IWM. We are trading at the bottom of the range. We are at the bottom of the range, not at the top of the range. So what needs to happen is banks, the market needs to tell us that they believe that the banks have stabilized. They believe that all these regional banks that the IWM holds have stabilized, and that means what? Again, the proof is in the pudding. When you eat it. So, when it comes to chart, the proof is in the price action when you see it. So, what do we want to see? We want to see it go above 179. Okay, 179, 180 zone, and start moving towards this 200 level. This is the 200 level is one of the most important levels that we will have going forward from here on out. If we cannot get through this 200 level and start looking at this 209, 212 zone, this larger zone right here, there is no way we can say that this second wave is over. We want to see it do and make some corrective moves moving forward, and stating that yes, the markets do believe that the worst is behind us, and we are looking to step up. The major players, the hedge funds, they are, the institutions are willing to say yes, we're putting our money now to use because we believe that worst is behind us. So the leading indicator for right now, the market, the ticker that's going to be leading the markets that you want to see is Qs continue to hold the lead. You want to see SPY improving, and you also want to see IWM starting to catch up. So you want to see all three big tickers, the big ETFs that encompasses most of the market, start to move in unison towards in a bullish scenario, or going towards a bullish price action. So once you have that, you understand. You don't need to look at 400 different tickers to say, oh, markets are finally doing this, markets are doing that. You don't need to look at heat maps. You just need to look at these three and understand that if they're moving together in a bullish way, the markets are telling you yes, they are becoming bullish. So if there is one that is not moving that way, that means there's lack of participation. One that is stagnant like SPY, that means not the whole market is participating. And the one that is leading QQQ is telling you that, is concurring with the fact that, and also giving you evidence that there are only so many tickers that are actually supporting the market. One last thing I want to look at quickly is our VIX. I just want to show you guys. So we are finally getting close to, it looks like we're hitting it, but this whole area right here, this was your pre-inflationary area, okay? And then we started going, and the inflation got high. It was starting to rise, and then all of a sudden, these peaks that you're seeing are induced by Fed raising their rates, and slowly they are moving down too. So there is this slope moving down, and now we're seeing that we're getting into this larger kind of grind up zone. So there is some evidence in VIX. Remember, VIX is how it has to do with the puts being bought, protection being bought on SPX. Okay, so understand that that's where the big money goes to buy protection. It's easier for them to manage their beta, manage protection, if they can lower the beta by hedging themselves with SPX puts and so forth. So from what it looks like, they're slowing down on being on the protective side. So This is good news too. So there's growing evidence saying that we are going to be turning on the bullish side. So what the matter this week is, the most important thing is what Fed says. We already know they're going to be raising it most likely about, it's, I think it's an 80% chance or 83% chance. You can go look at it at CME tool that they're going to be raising it by 25 basis point. Okay, it's the language that matters. It's what they're going to be. If they're going to start being a little bit more dovish, that will get us going and moving forward in a more bullish matter. Okay, I hope this helps. I hope you all have an awesome trading week, and we'll catch you soon. Thank you so much. Bye bye.